Hello and welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. And well, investors cannot be too happy right now as there really hasn't been a lot of money to be made unless you have been shorting these markets, because the overall markets have been very bearish in 2025, and many have been calling for the stock market crash. As we are sitting on this weekend right now, before we go into the markets on Monday, March 10th, we are sitting at an interesting position. This last Friday, both the SPY and the NASDAQ closed in some interesting positions. So we are right at the 200-day moving average for both the triple Qs and then also this SPY. For the SPY, we are currently down 6% from the highs that we were seeing. And even more significant, when we look at the triple Qs, the NASDAQ, we are down 9% from the highs that we were seeing. We know with markets, if there is a 10% drop, that is considered a correction. If there is a 20% drop, that is when we are officially in a bear market. And so right now is an interesting position. I think there is a mixed bag when it comes to opinions for the market. Many are saying that this is the bottom, this is the best time to buy, this is the dip opportunity, and many others are running away, saying that the markets are going to get a lot worse. And so let's do an overall analysis of the markets. Let's see where we're currently at and what we could see next. And so I think it's important to start out with the news that have been dropping the markets overall, and that is the Trump tariffs. So since the beginning of the year when Trump got into office, his favorite word has been tariffs. He has been talking about tariffs on Mexico, Canada, China, and there has been a lot of fear, uncertainty, and doubt in the markets. The markets have been not reacting the most favorable to these news of the tariffs. But what I encourage investors to remember is that Trump is a businessman, and these tariffs look more like a negotiating tactic to help America and better things in our favor. And so we saw two times now. We saw first the news of the tariffs in January and then February, and we saw both of those tariffs get delayed. So both times they were a negotiating tactic. If you're not familiar with the most recent news regarding the tariffs, there was already a delay. So the Trump administration announced a 1-month exemption from the tariffs for autos coming into the United States. And so we know this recent news of the tariffs sent the markets going crazy. As the first times we had tariffs, things looked to get better as Trump delayed them. Then there was news of tariffs again, but again, we are seeing that it is just part of a negotiating tactic. And so we have the tariffs causing a lot of fear, uncertainty, and doubt. And then also we have inflation causing a lot of fear, uncertainty, and doubt. Many Americans are not happy with what they're paying at the pump, at the grocery store. And then also what I consider to be the biggest economic factor here is that the Federal Reserve has kept interest rates high. So we have been waiting for a cut in interest rates, and the Federal Reserve hasn't been doing that. And so we have the fear, uncertainty, and doubt from the tariffs. We have the elevated prices for overall goods that consumers are consuming. And then also what makes the economy more stimulative, lower interest rates. We are not seeing that. And so the Fed has been pushing back on these interest rates and not putting them more in a favorable position, which is the opposite of what we want to see. We know that Trump is very pro markets, and he wants to see the interest rates drop as well. So he has tried to already during this presidency push Jerome Powell more towards the direction of having these interest rates cut. But the Fed has been persistent on their goal for 2% inflation and keeping these interest rates higher. And so we know with the stock market that it is heavily influenced by interest rates. And when the Fed announced that they were only going to be doing 2 rate cuts in 2025, this was announced in December. This was the start of the problems for the market. After this was announced, the markets took a pretty hard dip, and overall, we have been seeing a lot of red since then. And so also with the markets, most investors are feeling a lot of fear, uncertainty, and doubt. When we look at the fear and greed index, we could see that we are currently trading in extreme fear. And so what am I going to do in these markets? Well, if you've been following me long enough, you know that I am very bullish on the markets over the long term. I believe that if you're just looking at these short chops, you are going to really hurt yourself. What a lot of investors do is they will buy high and sell low. When the markets then have that big recovery, they will just be left in panic, fear, uncertainty, and doubt, and then doing the same thing, buying high again. But what experienced investors will do, what they know, is that the markets always recover, and they are taking this opportunity to buy the dips on great plays and opportunities. Let's remember, if we are going into a bear market, this is a fire sale. This is an opportunity. This is a great time to load up on your positions. And historically, those that buy when there is blood in the markets are going to be those wealthy when the markets recover. Those that sell during these times are just going to be left angry when the markets do recover. So will the markets recover tomorrow? Will they recover next week? Hard to say. Again, we are in an interesting position. The markets could rocket up from here, or it could continue to drift lower. I personally see us having some more red days, as there isn't really any economic news coming out right now that is going to flip the markets, in my opinion. Right now, the bears are louder than the bulls, so I do expect to see a little more bleeding. But again, this is going to be the times when I am dollar cost averaging into opportunities, and I am actually super excited that the markets are having a hard time right now, because I know when things do flip, everything will be a lot more green. But again, that is my hyper bullish opinion, and I am very long on the market. So everything I am investing into, I believe for the long term, and I am holding for a year or more. If you don't have that patience, these stocks could be dropping some more, and I only recommend investing if you're willing to take some losses on your investments. Also know that just because a stock is cheap doesn't mean that it can't get cheaper. So a lot of these dips and drops in the markets are opportunities, but they could also still be dropping lower. So just invest with caution. Make sure that whatever you're investing into, you have a long-term conviction on. That is my overall opinion on the market. I would love to hear what everyone else has to say in the comment section below. So please drop a comment, please leave a like, and let's all just stay level-headed during these red markets. Thank you guys so much, and have a great day. I'll see you in the next one.